What if your favorite pasta suddenly doubled in price overnight, not because of inflation, but because of a political decision made thousands of miles away? That almost happened until the United States quietly changed its mind.
The U.S. government planned to impose massive new tariffs on pasta imported from Italy, with some duties going as high as 92%. But after a review, those tariffs were sharply reduced for major Italian pasta companies, completely changing the outcome of what looked like an incoming trade war over something as simple as spaghetti.
Here's what actually happened in simple terms. The United States accused several Italian pasta producers of dumping, which means selling pasta in the U.S. at unfairly low prices in order to undercut American manufacturers. Because of this, in late 2025, the U.S. Department of Commerce announced plans to hit 13 Italian pasta companies with an additional 92% tariff on top of the existing 15% import duty, with the new rates scheduled to begin in January 2026. Two major brands, La Molisana and Garofalo, were singled out in the investigation and faced the harshest penalties. Italy responded by pushing back strongly, opening its records and fully cooperating with U.S. investigators, while requesting a formal review of the accusations. After re-examining the company's actual pricing and sales activity in the U.S. market, American authorities dramatically lowered the proposed tariffs, cutting La Molisana's rate to just 2.26%, Garofalo's to 13.98%, and setting a 9.09% tariff for the remaining 11 producers that were not individually reviewed.
This story goes far beyond pasta. If the original tariffs had taken effect, American consumers would likely have seen higher prices for imported pasta brands, while Italian companies could have lost access to one of their most important export markets. Pasta is a multi-billion euro industry for Italy, with exports worth over 4 billion euros in 2024 alone, and the U.S. market accounting for nearly $800 million of that total. At the same time, the U.S. has been collecting record levels of tariff revenue, pulling in more than $200 billion in 2025, showing how central trade penalties have become to economic and political strategy. What many headlines leave out is the political embarrassment this situation created for Italy's Prime Minister, Giorgia Meloni, who had hoped that her close relationship with U.S. President Donald Trump would protect Italian companies from harsh trade penalties. The initial tariff announcement suggested that personal diplomacy mattered far less than trade enforcement, while the sudden reduction after cooperation helped Italy save face and quietly sent a message to other countries that transparency and compliance can soften U.S. trade actions.
This issue is not fully settled because the U.S. Department of Commerce is expected to release its final conclusions on March 11th, and tariff rates could still change again depending on that outcome. Looking ahead, this case signals that similar trade disputes are likely to increase, especially in food, manufacturing, technology, and energy, as governments continue to protect domestic industries in an increasingly tense global economy. So the real question is this: was this a fair correction to protect American producers, or another reminder that global politics can decide what ends up on your dinner table? If you want clear explanations of global news without the noise, follow, subscribe,